Thank you for joining me today on Crypto Lit, the channel that focuses on increasing your technical literacy in the crypto space. My name's Nathan, and today's video is focusing on an article I read recently on glassnode.com that talks about how most people who bought at the Bitcoin all-time high back in November of 2021 have now sold at a losing position. So today I wanted to discuss this article a little bit and give some encouragement and then go over some data in the charts. So let's get it. So as I was discussing, I saw this article on glassnode.com, and if you're unfamiliar with Glassnode does a lot of on-chain analytics to provide insights into Bitcoin. So in this article, it talked about how all-time buyers have capitulated. Basically, the gist of it is they look at the on-chain data and we're able to determine that a lot of people had picked up Bitcoin in this range of about $50,000 to $65,000 last spring, from about the point of early March to where Bitcoin started to crash in mid-May. And what they had noted during that time is that most of the people who had bought then ended up, you'll see here, starting with the May-July period, the coin distribution was skewed to be very top-heavy, with a large portion of the coin supply held between 54,000 and 64,000. That meant that a whole lot of people had come into the market for the first time and bought up this 54 to 60,000 range. And then when the markets dropped around the middle of May, those people ended up freaking out a little bit and unfortunately had weak hands and ended up dumping their crypto. So you'll see down here what eventuated was a major market capitulation. Capitulation is when somebody gives up their position. So during this 2.5 month long period of consolidation where Bitcoin had bottomed out around 29,000 and then traded sideways for a bit, a great deal of supply was transferred by top buyers, or the people who bought upwards of that $54,000 to $60,000 range, transferred from those top buyers into exchanges for sale. This supply was then gradually soaked up by higher conviction buyers, meaning the people who are in Bitcoin more for the long term, with the cost basis of these coins becoming more heavily weighted between the 29,000 and 40,000 price range. So essentially, the people who jumped into Bitcoin because they were excited about the moves up and they bought somewhere around 54,000 to 60,000, they ended up freaking out when the market dumped in May and ended up selling between May and mid-July at a price range roughly of about 29,000 to 40,000 and lost. So that's a pretty substantial loss. So what we're seeing is then those people who bought in, those people who were more for the long term and they bought in that $29,000 to $40,000 range, they started taking profits over the next few months as Bitcoin started to rise again. So many investors who accumulated in the May to July correction took profits on the way back up. So when they were taking profits, that means they're selling to people on the way back up. And those people ended up creating volume nodes or sales volume nodes around 35,000, 47,000 and 62,000. So again, you've got these people who are buying it on the way up because it starts going up again. They get excited again and start buying at high times. And this is pretty much the overall trend of a retail buyer. Retail buyers being retail investors being the average Joe investors, you and me. And unfortunately, that's the way most of retailers work, is they end up buying because they get excited, they see things moving, and they buy when it's high. So what we saw was kind of an even distribution pattern there at that $35,000, $47,000, and $62,000 range. So the primary so basically when it got up to the all-time high in November and then crashed, we had this whole thing kind of repeat the cycle again. The primary redistribution appears to be coming from investors who bought in the 60,000 plus range around the all-time high, which has found new owners around the current price range of 35,000 to 38,000. So again, the cycle repeated itself. People saw Bitcoin moving, they jumped into it around the 60,000 100,000 and upwards range, or a chunk of them did. And those people, when it dumped again in the end of 2021 and beginning of 2021, they've now sold off to people who were sitting there with money on the sidelines waiting to buy in, and those people bought in at $35,000 to $38,000. So, and basically, in essence, the top buyers have been significantly flushed out of the market. And this to me is a real sad thing, because people they see the potential of Bitcoin, and they just don't have the understanding of when to buy and when to sell. And they jump into the market while it's on an upswing, and they get caught, and then they freak out because they see the drop in Bitcoin. And Bitcoin has a lot of these ups and downs, major ups and downs. It's not uncommon to see Bitcoin have a 10% movement in one way or the other. We like that volatility. As an investor, as a trader, we like that volatility, because it gives us buying opportunities and selling opportunities. But these people who are coming in, they don't understand the market, and they jump in, and then because it's on the rise up, and they don't take their profits when it's up, and they end up following it all the way down and freaking out and selling down, because in their mindset it's, oh no, I've lost half of my money. And so what they need to realize, and what you need to realize as an investor in Bitcoin and crypto space, is you haven't lost anything until you sell it. If you sell at a loss, then you realize the loss. But if you don't sell, it's an unrealized loss. And what we know about the crypto space is it's always, over time, moving up and to the right, meaning that it's getting higher and higher and higher. We're having more people come into crypto, more money come into crypto from large investors, from the more institutional buyers. And we're also seeing some other things that are pumping money into the crypto markets on more of a national or governmental level. So crypto is always going to be moving up. And you got to realize that you have to have this long-term mindset. You can't be freaked out by the short-term dips and rises. Don't sell out at a loss, because crypto is eventually going to come back. And we're seeing some of that now. And so I did want to jump some into the charts, but my message of encouragement to you is, if you bought around that $65,000 level and you freaked out because we've been down now for almost 3 months, and you've thought about selling, hold on to that Bitcoin. Hold on to that Bitcoin. Do not sell at a loss. Do not take what is an unrealized loss and make it a realized loss, meaning you sold out when it was down and now you really have lost money. Because what you bought was an asset, and that asset over time is going to have a lot of ups and downs. But if you hold on to it, you can sell it at the right time, because Bitcoin will eventually be upwards of 100,000, and it'll go past 100,000, and it'll get to 200,000, and it'll get to 300,000. You know, the same people who said 4 years ago, back in 2018, when I first started looking at Bitcoin, they were saying 50K. And Bitcoin back then, you know, it hit that 20,000 and then it dumped and went down to about $5,000, $3,000 range, you know, and so the people who were saying back then, when I was looking at it around 5,000, they were saying 50K. And nobody believed them. And now we've seen 50K, and those same people are saying 100,000 and 150,000 in the next couple of years. So hold on to that Bitcoin. It's going to come back. It's going to hit those higher numbers, and you will realize a profit. So let me flip over into the charts right quick. And I also wanted to show you the Fear and Greed Index. And one thing I'll note about this is, yesterday, Fear and Greed Index was down in the 20s. We've had a big pump yesterday on Bitcoin, and now Fear and Greed Index is 51. And what this means is essentially the sentiment of the market. When things are dumping, you get a lot of fearful people, and when things are pumping, you get a lot of people who are kind of greedy and looking to jump in the markets. And what we want to do as investors is buy when the Fear and Greed Index is in the high fear area, anywhere over here on this left hand side, and then we want to sell when it gets into the greed area, starts creeping up into that green, because that tends to be where things top out. So let's go ahead and jump into the charts and see how things are looking today. And what I want to kind of go over is this head and shoulders pattern that people have been looking at for the last couple of months, several months. If you're unfamiliar with the head and shoulders pattern, it's a pretty common trading pattern where you have one peak and valley on the left-hand side, which is supposed to be forming your shoulder, another peak and dip in the middle, forming the higher head, and then another one on the right-hand side. And then you have this neckline connecting the shoulders to the head to the right shoulder. And the way you measure this is you come up and you draw a line from the top of the head down to the neckline, and then you take that to the breakout area and put the top of that line at the breakout, and this is essentially supposed to be your target down here. So when it kind of realized and confirmed this head and shoulders pattern up around $46,500 range and continued to break down, the target was going to be that low 20s. Not many people really expected it to get down there, but that would have been the technical target of this head and shoulders pattern. Now I want to flip over to a website called the Pattern Site right quick, which is done by Thomas Bolkowski. He's really got a lot of in-depth analysis on trading patterns that he's accumulated over decades. And one of the things he says about these head and shoulders patterns is that the time or the percentage that these patterns actually meet the price target for a head and shoulders pattern is about 51%. So what I tend to do with these is I take that 51% and apply it to the line that's measuring out that price target. And if we took 51% of this line, it really kind of puts it at that $34,000 range, which if we also then take a look at the Fibonacci that I've drawn from the top, actually from the start of the bull market up to the top of the bull market at the all-time high in November, that Fibonacci, the golden pocket for it, was measuring in that $34,000 range up to about $36,500. And so the price target that I measured out, 50% of this line, was right at $34,000. So the two lined up really well. And what we can see is that Bitcoin did come off this head and shoulders pattern and come down and meet that target pretty well, and then had a nice bounce. A lot of people are taking a look at an even kind of bigger head and shoulders pattern that was coming across like this and connecting over here. And so the good thing is that if you were looking at this as a head and shoulders pattern, it's kind of been busted because it did come down and it tested that neckline but didn't close below that neckline and then shot back up again. We had the Russia-Ukraine war fear come in right around this area and plunge it down some, but then the markets turned around and shot right back up. And what we're seeing, to give you a little bit of hope, is what I think is happening is that Russian money is flowing into Bitcoin. And the main reason behind that is with Russia being cut off from the SWIFT network, which means that they can't make any bank transactions outside their own country anymore because they've been cut off from that SWIFT network. Russian money is flowing into Bitcoin to be able to do those payments or transactions across border. And so what we saw yesterday is a massive jump of money in Bitcoin. Bitcoin swung up about 15% yesterday alone, and today it's continuing to go up. So it's been hovering right around that $44,000 range. And so, you know, of course we don't like having a war, and nobody wants to see that, but there are some aspects of that are playing into driving the Bitcoin price up, and we're seeing that play out in the markets as a lot of people have been discussing. And so what I'm seeing for Bitcoin over the long term is that I've gone on ahead and I've drawn a new Fibonacci from the all-time high down to the bottom of the crash here at $33,000, and now I'm seeing a retracement back up to the $55,000 level. The other thing I'm watching for is the EMA ribbon that I've been tracing, and I do the EMA ribbon on the daily because I like to pull out. If you can confirm patterns on the daily, it's a little bit better and more reliable, and we see how things play out on the EMA on the daily, it's a little bit better. And what you'll see is the daily, the EMA ribbon on the daily in TradingView will also throw signals to you for when it flips that EMA. So you'll see we had the EMA ribbon flip back here in December and give us a short signal, and it's basically stayed in that bearish movement on the EMA ever since the first part of December. We got close to flipping it back over here in the middle of February, then the market's kind of trashed again, and now we're seeing this start to narrow even further again. As Bitcoin has come up over the last couple of days and had that massive run, we see this EMA ribbon starting to narrow. And what I'm looking for is for that EMA ribbon to flip green again, and when that does, that's going to give me a little bit of an indication that things are going to be moving up. So what I'm looking to do is, watching this EMA ribbon, I'm waiting for it to flip back bullish. And when it prints that signal for a long, as the EMA flips back to bullish, that's where I'm thinking I may put a long position in, with the plan that as it nears this golden pocket on the retracement, that you try and start taking profits somewhere in this area, because when it gets up into that golden pocket range, unless there's fundamentals going on in the marketplace that'll drive it past it, I would anticipate that would play as a resistance and would bounce there. So watch for that EMA ribbon to flip. Maybe look at putting in a long there and taking profits as it rises up here into the golden pocket range. So that's where I anticipate things are going to move to in the near-term future. I think if you're looking at Bitcoin, it was made for the times that we're in. We're seeing governments freeze people out of the market and freeze people out of banks because they don't like the way those people are thinking. It doesn't line up with the way that government thinks, and so they're trying to penalize them and freeze them out of that market, freeze their assets. You're having governments print massive amounts of money, which is just causing inflation to go through the roof. And these are the things that Bitcoin was designed for. Bitcoin being a safer area for our money to go into. It's always moving up and to the right, giving you that financial freedom and the ability to transact as you please, and not be under a necessarily centralized system that's going to try and direct you or force you to work a certain way, and if you don't, then they'll cut you off. We're seeing that Bitcoin is that financial freedom. So again, just wanted to hop on here, give you some encouragement. If you bought in that $69,000, $65,000 range, don't worry, hang on. Bitcoin is going to be coming back. More money is pumping into it. Whether Bitcoin's going to go up this year or next year, I really can't say, and I don't think anybody can say. We have the traditional cycle, Bitcoin cycle model, and I think that's been broken a little bit this year. It hasn't played out the same in this cycle that we've had in previous cycles. So whether we're going to have another cycle come around and we're exiting out of a bear market, or we're having a shortened bear market and going back in, who really knows? All I can say is that Bitcoin will continue to go up, and if you have that long-term mindset, you're going to be in profits sooner or later. So if you bought high, don't worry, hang on to that Bitcoin, and sooner or later you'll be able to take a profit off it. So thank you for joining me today. Hit that like and subscribe button on your way out, and hope to see you in the next video. Thanks.